Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. That's going to be Andy Swan, the co-founder of LikeFolio.com. Thanks for joining us, Andy.
Yeah, thanks for having me.
All right. So I look at these delivery companies, and the pandemic really ramped up what people were getting delivered on a daily basis. But now you've got inflationary pressures across the board. And I know UPS is different from FedEx, where UPS has unionized workers. FedEx has more contract workers for that last mile. Are these inflationary pressures going to hurt them, or have they already hurt them according to your data?
Yeah, I really can't speak to the cost factor that these companies are experiencing. I think it's clearly a big factor. But what we like to look at LikeFolio is, how the consumer is responding to the services that they get from these companies. And there's a clear divergence going on between the consumer happiness levels from customers with FedEx and those with UPS, and especially is being driven by late package delivery. You can see on this chart a widening gap between the number of people complaining about late packages from each service. And UPS is doing a much better job than FedEx at this point. We think it's mostly due to a strategic decision that UPS made in January of 2021, which was, we're going to be better rather than bigger. And FedEx may have took an opposite route than that, and it really showing in the data. And so what we're seeing is that consumers consistently prefer UPS to FedEx at this point, and that gap is growing, and that is not good, for a company like FedEx to be ramping up so much in the number of people talking about their packages being late, because what that does is eventually, a lot of times we don't have a lot of control over who ships the package to us, but it does reflect badly on the retailer who we bought from. And so those retailers have to be looking at that data. FedEx's late delivery has increased across the board, and they have to be thinking about either switching carriers or giving the consumer the option, in which case we think the consumer will be more and more likely to choose UPS because they're quite simply doing a better job of getting the package from point A to point B.
Andy, this chart is counterintuitive, isn't it? Because the negative number is more positive in this case, because the topic is late package mentioned. So you actually, when I looked at this, I'm like, wow, FedEx doing well, until you read the details. No, you don't want to be doing well in late package mentions. You want the negative number, so UPS having the negative 20 is more significant, correct?
Yeah, and it's a really big deal. You're exactly right. So this is, that chart is the number of people complaining about having their package being late. And so you want complaints to be down, not up. FedEx sees complaints up, UPS sees complaints down, and the gap between the two is widening very significantly and very quickly at this point. And I think it spells trouble for FedEx over the next year, because consumers have a pretty long memory. When they don't get what they want on time, we've become a culture that's really accustomed to getting the package that we wanted when the retailer told us we were going to get it. And when it doesn't happen, it can cause serious problems.
Yeah, and I think that's the big thing I wanted to kind of hit on, Andy, was the fact that if a small business or a medium or a large-sized business starts getting complaints from consumers, they're not going to FedEx and complaining. They're going to that company and complaining. So with the contracts that a lot of these delivery giants have, that changes. And if you change once, you're probably not changing back. It's almost like you got cable at home. You're changing once, and you're probably not changing again. Is that what, this consumer sentiment data shows, that, hey, these companies will switch, and they'll switch and stay with a competitor?
Yeah, I think that's the big risk. I can't speak to how many companies yet are switching, from one carrier to the other, because like you said, it's a huge decision to do so, or to give the consumer the choice is a big structural infrastructure type of change at a lot of retailers. But when you start to see the gap between those service levels getting so large that it becomes undeniable, it puts a lot of pressure on retailers to do so. And so you start to think about, who's going to win those renewal contracts, who's going to win new contracts. If I'm a large retailer, at the worst case, this gives me pricing pressure that I can put on FedEx if they're my carrier right now. So, from a long-term perspective, we think this is very significant and a positive for UPS and a negative for FedEx.
Now, we saw a big dump in the shares of FedEx after their last report. They cited a bunch of inflationary pressures and costs rising. They weren't able to manage that. It seems like the executive team might be faltering here a little bit. But for an earnings score going into this report with the possibility of a big move, do you guys have any positive numbers going into that report?
No, we're pretty bearish on FedEx, and I think I'd be even more comfortable taking a longer term view of that bearishness. But I do think that going into an earnings report where the company has faltered historically, it's probably a decent opportunity to look to the downside on the stock, especially as it's moved a little bit higher here recently. So pretty good setup here if you're looking bearish, in my opinion. The data plays that out. Like I said, we really don't have that much insight, none at all really, into the cost and those types of things that FedEx is incurring. We just know from a consumer demand perspective, it's very likely that consumers will be jumping ship fairly soon.
All right, great stuff. As always, Andy, have a great day.
Thanks, you too.
All right, that's Andy Swan, the co-founder of LikeFolio, joining